Hello, everybody.
Hi, everyone.
Super excited to have everybody join us for our first Ask Us Anything. Normally it's Ask Me Anything, but my co-founder Robert and I are here to answer any of your questions about anything you want, but hopefully they're about investing in US real estate as well as financing as well. Um, so in this session, we'll be addressing our views on where interest rates are going, some of the markets where our clients are buying in the US, and some other topics I think that you'll find of interest. And hopefully we'll have a fruitful discussion and open it up for some Q&A. So before we get to the questions in the chat, I wanted to start off with our macro view on where things are. The next few weeks are going to be pretty crazy. You've got employment numbers coming out this Friday, and you've got earnings, and you've got an election. But I think, there's a lot of noise. But if you think about longer term, where things are, where the release valves are, and this is exactly the same things I tell private investment forums. And so this is our thesis. So one is, there's a whole lot of debt, and that's not looking to improve anytime soon. What we know about, governments and political leaders is that they don't like pain. So there's going to be more money printing. And if you look at the budget of, let's just say, the US, you have three main expenses. You've got interest expenses from all the debt that has been issued. You've got military, and you've got entitlements. Military, that's not going to be curtailed given, the global situation. You've got entitlements, that is very sensitive. So you've got interest payments. Now, if you look at the market expectation, it looks as though interest rates are going to be reduced over the next year, up to 200 basis points or 2%. I personally think that with the current debt outstanding, the only release valve there is interest rates. Because we need the sovereign bond market to work efficiently. We need other countries to buy our debt, all that kind of stuff. So I personally think that interest rates are going to be a lot lower than the market is expecting. So what does that mean? So that means is, you need to position yourself with in what I say scarce assets. So that's either crypto, that's real estate, that's art, that's things that have scarcity value. So, and what's going to happen is we're going to be in a world where, obviously we can't have our cake and eat it too, but governments need to choose, I guess you say, pick your poison. And what the US is going to choose is assets are going to be even more inflated. So I think it's really good to position yourself now. Owning US real estate is the most durable asset. It has positive cash flow with rental yields, one of the few markets in the world that has that. And I can't see how property prices, all things being equal, will soften meaningfully. And rates have gone up a lot over the past few years, and property prices have gone up because there's just not enough homes. And I think, with interest rates coming down, it's going to be, an even more fluffy environment to own real estate or any scarce assets. So I just wanted to leave that out. I'm going to talk about this more going forward. But I think it's important to hand this over to my co-founder, and let's talk about financing, and then we'll get into the questions. I think, some of the programs that we have are super hassle-free for overseas investors like yourselves. And I'll hand this over to Robert to elaborate more.
Yeah, thanks, Donald. And super good insight. I think as you mentioned, as we come closer to the elections, it's going to be very interesting to see how they try to stimulate this to be able to get the last votes in, something along that line. All right, so getting to the mortgage financing, I'm not sure if everybody is aware on this call, but last December we actually became a direct lender, meaning that besides being a super broker, being able to broker loans not only in the U.S. but globally, we are now lending. So it gives us a much stronger position in the market. Certainly, if we can place it in-house and we have full control over the transaction, that's the first option. But in the event we can't, we have a variety of lenders and investors that we work with to make sure that not only are our clients getting the best terms and the best rates, but because foreign nationals and U.S. expats are all we work with, we know exactly, and when I mean exactly, it's to a science of how not only to take the application and structure the loan, but actually through the entire process to closing of the transaction. So I'll share my screen and just give you a general overview of our capabilities. Okay, so as most people are aware, we focus only on foreign nationals and expats. So 100% of our clients are living and working abroad, but obtaining a U.S. mortgage. Our general overview of our mortgage product, so we can do purchases, refinances, and equity releases or cash out, depending on what country you live in. We can get up to 75% financing for foreign nationals in all 50 states and up to 80% if you're a U.S. expat. And when we talk about U.S. expats, we try to make this exactly as if you're living and working in the U.S. and walking into a local bank. So it's the same market rates, the same programs. The only difference is, issues like no W-2, foreign direct income, et cetera, is already resolved because, again, this is all we do. 30-year amortization, regardless of the borrower's age. Very unique to the U.S. Whether the borrower is 19 or 99, they can still qualify for the longest amortization period possible, depending on the loan program. So again, a very specific U.S. program, but it really helps, especially when you're trying to get rental yields. Speaking of rental yields, as we will see, rates hopefully will go down, as Donald had just mentioned. But we have a fantastic loan program that allows you the surety of payment, but also the availability to, I guess, enjoy a greater yield on your rental property with a 10-year fixed interest only. And we offer this in-house, and we also offer this as a broker product. So it's a fantastic way to do it. And if anybody has any questions, this is obviously the format for this webinar. So happy to answer any questions on this. Loan programs in all 50 states. So regardless of where you're at or where you want to purchase, we do have a loan option. What makes us very unique is we qualify everything, at least for investment properties, with common sense underwriting. If you're going to purchase a structure or a building, you certainly aren't going to qualify on your personal income. You're going to qualify on the cash flow of the property. And that's actually how we qualify these rental properties. So as long as the rent can cover the mortgage, taxes, and insurance, the loan qualifies on a one-to-one basis. Absolutely fantastic program. If you want to use foreign income, we allow that depending on the country. You may need to get your taxes translated, but in general, if you're a U.S. expat and you're earning income abroad, as long as you file taxes, we can use your foreign income. Borrowers, obviously non-U.S. citizens, expats living overseas, no U.S. credit is required, and no minimum deposit is required. So this is actually quite important. With our lending, it is always dry lending. There is no requirement to put up AUM for these products. Makes it, again, an absolutely fantastic way for you to manage your own money the way you want to manage your money. The loan process in general, we have a very slick portal, which we just launched, and I'm not sure if everybody is following our weekly newsletters, but we highlighted how this portal works. It allows you to take the application online in a very simple and easy process and upload your documents securely. Once we have everything, it says 72 hours, but normally we can issue a pre-approval letter within 24 hours. Our closing times are identical to what the US requires, which is an average of 30 to 45 days, depending on where you're at and where the loan programs are. And what, again, makes us quite unique is you can start your loan application in the country that you're living in without ever having traveled to the US and close that transaction in that same country in a variety of ways. One thing, and I think Donald will attest to this, we're very proud of is 97% of our loan applications that we take in. So it means after you speak to a loan officer and they say, this is fantastic, we can move you forward, 97% of our loan applications get approved. And again, this is because our only focus is foreign nationals and expats. We are by far the industry experts when it comes to this. We have 24/7 service, 24 hours a day, 7 days a week. We have loan officers based all around the world that speak your language and in your time zone. No longer do you need to stay up until 3 or 4 in the morning to talk to somebody in New York. We're working on your time zone, at your convenience. So I'll just go over a couple of the loan programs, and then we can talk a little bit about some of the other services we offer before we get to the questions and answers.
And Robert, I think just for the audience, for the audience who's not used to some of the terminology, when you say pre-approval, maybe why is that important for a U.S. home buyer?
Yeah, fantastic question. So there's a couple of reasons. If you're looking to buy a property and you're shopping for a property, you may find something that you absolutely love and you want to put an offer in. You call the realtor. The first thing that realtor is going to say is, have you been pre-approved for a loan? If you're not pre-approved for a loan, they're not going to accept your offer, which means you could actually miss out on the property. So the first thing you want to do before you start shopping for a property is get that pre-approval letter. And it's a free service. So, everybody should do this as the first step in the process. And it also is important to know what the interest rates are, what you're paying, how you qualify. All of that is wrapped up into the initial phone call with the loan officer. But getting that letter is, it's gold. Once you have it, you're going shopping. All right. So our most popular program, which is the AM Rental Coverage Plus. This loan is what I had discussed in the previous slide. There is no personal income required for this loan. Now, this isn't something that people should be concerned about. Like, how can they not check my income when I'm buying a property? If you think about the way investment loans should be qualified, is they should qualify off how the property cash flows. So this is just common sense underwriting, and this is what we do for all investment properties. So no longer do you have to collect all your tax returns, have all these things translated, whatever it may be. When we get the appraisal or the valuation report, we also request a summary of the rent for that area. That is the amount that we will use to qualify the property. And if that can cover the mortgage payment, the property tax, and the insurance, the loan qualifies. If for some reason it doesn't qualify sufficiently, it doesn't mean that the loan doesn't qualify. All it means is that maybe you have to come in with a little bit more down payment. So it's a fantastic way to qualify the loans. We have loan amounts as low as $100,000 for this program and up to $3 million. So what that means is it with up to 75% financing in all 50 states and loan amounts as low as $100,000, it really allows almost everybody to be a real estate investor. So, and I think, Donald spent 20 years in Hong Kong, and I think, he's a prime example of, what property values have increased in major cities that make it almost unaffordable or unobtainable for a lot of new investors. I don't know if you want to touch on that, Donald.
Yeah, it's a little bit of a sore spot, Robert, not being able to afford a Hong Kong property. But I wanted to talk about something really important. This kind of a way to answer what Robert said is that, historically, when you have excess cash or reserves and you have all your other investments in Asia, there's a strong connection with real estate. Historically, you always buy real estate for investments where you live. That's rational. There's access. You can go visit the property. There's local knowledge. I know that, mid-levels is better than Pak Fu Lam in Hong Kong, or I know that Orchard Road has better value than East Coast Road, for example. But an international investor doesn't know that. I also have onshore financing. Now, this has been a good recipe, right? So you buy property, the property prices go up, you make some money. With leverage. But that game has changed, partly because we've all made money on everything, stocks, real estate, you name it, just because interest rates have gone down and created this environment for us to make money. I would argue that in the new regime or the new paradigm, or however you want to say it, it's more important to generate cash flow, positive rental yield. That means I make money with my rental income, even after mortgage expenses and insurance and all that kind of stuff, plus the upside potential of capital appreciation. And I would argue that, not many countries in the world have that ability. Certainly not Singapore, certainly not Hong Kong. And I think, with the US, people hear it, they see it in TV shows, New York or California or Texas. And I can tell you, part of the issue is that there's not enough information. And this is the problem we're trying to fix. We're the only company in the world that's brought US mortgages directly to our clients overseas. So that's number one. Number two, we have a service that if you speak to our loan officer and say, hey, listen, I really want to get involved in US property, but I don't know where to start. Let us help you, right? You have an aunt that lives in Texas. We can find some properties in Texas that meet your budget and your rental income profile. So I guess it's a long way to say that the US, if we can fix, the accessibility, and if we can fix financing, which we have, and we can fix knowledge, then, if you have money, you should go where you make the most money, give or take. So, Robert and I have been on this crusade for the past few years to educate the world on the benefits of investing in US real estate, but also bringing financing to the world. So I think, it's kind of a long way to say that if, spend a little bit of time, whenever you make investments in Apple or Amazon or Bitcoin, whatever it is, you always do research. Let us help you with that research to find a good investment opportunity. So that's kind of one thing I wanted to say. Yeah. So we
Yeah,
do.
and
Yeah.
sorry, go ahead.
Go on. So I
No,
just
and I
want to, just
think
in terms of housekeeping, this is a ask us anything. So please type in the Q&A box or the chat box in your Zoom link and ask us anything you want about anything. Hopefully it's, related to investing in real estate and financing. But please, for the audience out there, please go ahead and ask some questions. Sorry, Robert, please go ahead.
no, I think just to what you were saying, we've been doing this for long enough to know what the issues and what the requirements and the needs are of our clients, whether it is providing expert tax advice through a partner, whether it's being able to transfer funds, with the proper FX rate. All of these things have been curated to make your journey as a real estate investor much.
Well, it sounds like this is what we call in the media entertainment industry as a perfect segue. So
Yeah.
I
Well,
think with what Robert
we've got one more
Robert
loan
said.
program to qualify or to
Okay, cool.
discuss. Yeah. Okay, so getting to the U.S. expats. So about 30% of our business are U.S. expats living abroad. But if you are a U.S. expat and you have experience going to your local bank, and believe it or not, this probably is half of our business, where a U.S. expat goes 75% through the process with a bank, and then they happen to look at their income carefully, and they're like, wait a minute, you're earning your money abroad, you're earning your money in foreign currency. I'm sorry, we cannot help you. And it's a very sad but common occurrence. So with us, not an issue. Again, because all we deal with is foreign nationals and expats, we do not need a W-2. As long as you file your U.S. tax returns, absolutely fine. You qualify just as, again, if you were living and working in the U.S. Credit scores, we've just reduced that. It says 680, but now we can go as low as 640. And again, we have minimum loan amounts on this particular product of $150,000 all the way up to $5 million. And it qualifies again, just like it would be in the US on your debt to income ratio. So we can go as high as 43% on your debt to income, and you still need to maintain US credit, but it's a fantastic, absolutely perfect program if you're a US expat and you've had issues with either purchase or refinance. So with that said, as Donald said, we're going to segue into our service provider. Donald, you
Cool.
want to
So,
take off?
yeah, sure. Thanks, Robert. So we've got two slides here. It's a little bit of housekeeping. So, on any journey, you need, some, external services. And these are some of our trusted partners that we've been working with. I'll quickly go through each one of these, but it's important to note in the Q&A, in the chat bot, there are links to all of these service providers if you want to contact them directly. But also our contact information is towards the end, so you'll be able to get that. So one is Halo. So this is a global foreign exchange service. We use them almost exclusively for our clients who need to remit funds to the US for their purchases and down payment, but also for whatever foreign currency needs that you may have. So they're super good, great rates. And we've had really good feedback of how their rates are better than their local banks. Number two, Steadily, which is a property insurance provider in the U.S. Again, it's something that is necessary to have when you're buying a home in the U.S. Business Anywhere is an LLC provider focused on overseas clients. While it's not necessary to own an investment property in LLC, we almost say it's mandatory given the tax benefits, the liability benefits. So I would encourage anybody that buys a property in the U.S. to use an LLC. It's cheap and it's easy to set up. Astra is a Singapore-based firm that does financial planning. American International Tax Advisors is a Asia-based, U.S. tax accountant. They're fantastic. We send all of our clients there. They give you tax advice, help you with your filing. I think one thing to note is that there is sorry, my light just went out, so I'm suddenly become dark. There is a misconception about, the tax regime in the U.S. I think if you're a U.S. citizen, it gets a little onerous, but as a foreign national, it's super easy. You earn some rental income, you do have to pay some tax on it, just like everywhere in the world. However, through an LLC, there's a lot of write-offs and strategies to minimize your tax liability. But these guys are super good, and all they do is focus on folks living outside the U.S. So you are their client. Ausplan Group, this is a property management company that we work with. They've been around for, I think, 15 years, maybe a little more. And they only focus on foreign buyers of U.S. residential real estate. And, one of the big mental hurdles that somebody needs to get over is like, if I buy this home in Texas, who's gonna, deal with the tenants and who's gonna help with this and that? That's what these guys do. And actually, the pricing is super cheap compared to comparable services in the US. The next slide.
So just kind of touching on, especially the American International Tax Advisors. As Donald had mentioned, people have they have a wrong idea of what U.S. taxes are. And Thomas and his group at AIT they've been able to make sure that as you're buying a rental property and earning income, you're maximizing your yield with proper tax planning. So if you're looking, or if you already have US property, it may be worth reaching out to these guys and just talking about how potentially you can save even more money with various deductions. The US has no stamp duties, which is a very rare occurrence when it comes to international investing. And if you were to take markets in many countries, the U.S. has no cooling measures, so it's a free market, and property is going to appreciate the way that the demand is. So okay, the next slide.
Just very quickly, some of this is related, some of this isn't related. Hotel 101, this is a company that sells, you get to buy hotel rooms in Niseko or Madrid. There's a good return on it. August One is a company that we've worked with that offers Portugal residency programs for investing into some Portuguese funds. But here's where we get to the juicy parts. So bite-sized investments are a Singapore couple, which with our help and our financing have now own 18 rental properties in the US. They've quit their jobs, they go traveling all the time, and they're just sitting there collecting cash flows. So they have a masterclass. They teach you how to do this. They use a special a system, which is called the Burr method. I won't go into it too much here, but I would strongly advise you to get in touch with them. They're awesome, and they've made it work. And last but not least is American Mortgage's real estate listings. We actually have brand new Texas properties that are positively cash flowing, really good price points. We also have some properties in Florida that we're selling. It's a way to start. It's a way to bring properties to our audience. The market in the US, and this is kind of why it makes for such a strong investment thesis, is that there is a 7 million home shortage in the US by far. And, it's, for the average American, it's really, it's unaffordable. It's become a political thing. You probably hear it in, debates or whatever, but that's not our problem, right? So, people in the US who can't afford, they're forced to rent. And that is good for landlords, so it's actually, in a perverse way, a really good environment for international investors, because you're owning this asset that the rental yields are being squeezed up because there's just lack of housing in the US. So yeah, that's super interesting. The really good prices for these Texas properties, and Ausplan also manages them for you. So I guess we've covered the bulk of what we wanted to talk about. We're going to dive into some of the Q&A, but I do want to just do one little piece of housekeeping, is that we have an affiliate program. And what that means is that you may not be the person who will be investing in US real estate, but if you have a friend or family or know somebody that wants to invest in real estate and wants to get a mortgage, we offer a referral fee for this business. A lot of our business comes from our partners around the world. These are mortgage brokers, client advisors of private banks globally. So I wanted to, plug our affiliate program. And with that said, Robert, should we dive into the questions?
Yeah, certainly. So just to kind of touch on the affiliate program as well. If you are an advisor or a real estate agent or whatever it may be globally, and you do think you have clients that may be interested in US real estate, you should reach out to us, because we have a fantastic program that not only benefits your clients, but benefits yourself. So let's get to the questions. Number one, as an expat, I don't receive a W-2. Does that impact my rate or terms that I qualify for? So I'll take that question, Donald. No. Again, because all of our clients are living and working abroad, all of our programs are tailored specifically for this. So issues that a bank in the US would certainly have difficulties with, We do not. You do not need a W-2, and foreign earned income is okay. It does not impact your rate. Really, on U.S. citizens, the rate is really determined by your FICO score and the loan to value of the property.
Awesome.
Next question. Is now still the right time to invest in the U.S.?
Can I
Donald?
take that one? Yeah, yeah. So listen, in anything, you can never buy the low and you can never sell the high. But I can tell you that um, if you look at, if what I said earlier, property prices are being squeezed up because of lack of supply. So, if you don't buy now and you're waiting for the prices to come down, you may not have that opportunity. But what do we know? So that's that's the cost of your investment. But what do we know about the other cost, which is interest rates? So we know that rental prices are going up, but we also know that interest rates are going down. So what happens is if you buy now and interest rates will go down, that means as the property price goes up in the future, you can always refinance it in the future at a lower rate. The cost is going down and your rental income is going up, so you have higher margin as time goes on. In some, you have to do a little bit of research, but some markets have been a little soft. But, in some markets, I mean, in most markets in the US, it's been so strong. And it's because of this phenomenon of lack of supply, and people overseas want to move to the US. They want their kids to go to school in the US. They like the positive rental yield. So you have this demand that is organic along with foreigners buying. I mean, I'll give you an example. I think whenever Robert and I give this anecdote, people are surprised, but this is public information that over the last 10 years, foreigners bought $1 trillion worth of US residential real estate. $1 trillion. This is even without being able to really get financing, except with us. So, they are buying, and I think that just shows you that, it is a place that people want to buy, people want to invest, and people want to live. So the answer to that question is buy now, don't wait, because the prices are going up. And when they go out, you can refinance with a higher equity value at a lower rate when rates continue to go down over the next few years.
Yeah, I think to touch on that, I mean, it was a great answer. We get a lot of the calls from the clients, and they'll say, "Well, I want to wait for rates to come down a little bit more, or whatever it may be." And Donald, as you had mentioned, as soon as rates go down, say they go down another 0.5% or whatever it may be, uh, the owner occupied or the borrowers that have been just the unsophisticated borrowers that are sitting on the sidelines are going to jump into the market. And what is that going to do? It's going to create more demand for the same property and drive the price up. So you're basically paying more for a property when Donald had mentioned you can always refinance it down the road. So our suggestion, buy now before the market goes crazy. Next question. What expenses or costs can we expect when owning properties in the US? Donald, I'll let you touch on that.
Sure. So the expense, so there's closing costs and there's annual costs, right? So closing costs are, fees, there's insurance. Those tend to add up all in about 5% of the loan amount. And then on an ongoing basis, depending on if you're living in a condo or living in a single family home, if you're living in a condo or a community, there could be, something called an HOA, which is a sort of an association cost. But generally speaking, it's, there's a yearly maintenance, which is kind of a subjective thing that you have to put into your calculations. There's insurance, and that's really, and taxes.
And Uncle Sam. And Uncle Sam.
And taxes.
Right, exactly.
But, I will say, just to kind of touch on what's going on in the US is that, what makes the US really one of the, I mean, every country goes through cycles of unhappiness or whatever it is. But generally speaking, the US gentrifies and retools better than any country in the world, period. Right? If you can't afford to live in California, California has seen 500,000 residents move out, which is fair. You can't afford to live in California. You move to Texas, there's no state tax, and you can actually raise a family and be successful. You could drive an Uber, you can get a job, and no other country allows that. And what's happening in the US is, that gentrification is happening and it's pushing up rental yields in a few states. We don't see that slowing down any further. And the composition of people living in California and New York are changing, right? Obviously, it's looking and feeling a lot like Singapore, where it becomes more of an affluent, coastal states. But these people moved to Florida, they moved to Texas, they moved to Georgia. I'll give you some anecdotes to kind of support our thesis. In the Southeast corridor, 9 EV factories have been approved to be built. Each one of these factories hires between 2,000 to 5,000 people. We had a client that's looking at buying homes near Intel semiconductor factories in the Midwest. These hire 10,000 people each. These guys will move there for this employment opportunity, and they're not going to be buying, they're going to be renting. And so as a landlord, you want to be in this situation, and the housing supply isn't going to get fixed because you can't tell a private developer to build 7 million homes because we need more homes, because these guys are private institutions. But even if they did build 1 million homes, who can afford it? You and Blackstone, these institutions. And that's why the institutions, they see what we see, is that this is a great investment opportunity at the moment to be a landlord. So anyhow, it's a kind of a long way to answer, the cost, but it's really important that you see what's happening. There's nowhere in the world where you can say, I want to be in the game, and homes are 200,000 US or 250,000 US. It doesn't exist. You can't get in the real estate game, anywhere in any major country for under 1 million US, 2 million US, right? So, I don't want to plug I'm going to plug a report that we will be publishing this week. So please make sure you get on this distribution list. We have done a rental yield comparison for 50 of the major cities in the world, and we compare them with the rental yield for the top 100 cities in the US based on population. But I'm going to do something really, really fun that, sometimes, people do on these webinars, is I'm going to ask you to, what do you think the average rental yield in the US is? Gross yield. You can answer if you want. If you're not, towards the end of it, I'm going to answer the question. I think it's going to surprise everybody. Sorry, I'm going on and on. Let's answer the next question, Robert.
So I stayed up very late for this webinar, and I'm glad I did. Thank you very much.
Thank you.
As a Canadian, first-time U.S. real estate investor with excellent Canadian credit, but no U.S. credit. How do I qualify to buy an investment property? What are the steps? Thank you. Again, first, thanks for staying up late. We appreciate it. We do have people that work in your time zone, so in the future, if you want to schedule something, which will be at the in the chat at the end of the call, you can actually schedule something in your time zone. But for our foreign national clients, whether they're Canadian, they're European passports, South American passports, whatever it may be, you do not need U.S. credit. It's fantastic if you have credit in your home country, and we can accept that. If you don't, that's perfectly fine as well. We do have programs that have no credit profile at all. And again, it's just like qualifying on the rental income of the property rather than your personal income if you're buying an investment property. If you're buying a property as a holiday home or a vacation home, then it's just a matter of submitting your tax returns and being able to qualify on a debt-to-income ratio. So next question. Good day.
Wow, these are a lot of questions. We might have to move into turbo gear and quickly rapid fire these questions.
Good day. Can you
Awesome.
speak to if you can purchase as an LLC? So I'll take that. Yeah, we always recommend an LLC for a variety of reasons. One, it protects you as an individual in case somebody was to get injured or worse in your property. The liability stays within that LLC and doesn't go up directly to the individual. So it's really a good way to hold the assets, but there's also a variety of reasons on a tax basis that you're able to take certain deductions to where you can really maximize your yield and minimize your taxes. Next question: how do I manage the properties? I think Donald covered on this earlier with Ostplan, but Donald, if you want to quickly.
Yeah, we work with Ostplan. They're comfortable working with non-residents, foreign nationals as well. But ultimately, we will help you with this journey. So, if it's, so it's important to use us as a conduit for everything related to this real estate investment journey, whether that's helping you set up an LLC, finding a property manager, finding a realtor. We can do this all for you. Thanks for
And
the
we have all
question.
of that. We have all of that available on our website in the middle section on our concierge page, and it's all free, free service. The products.
How would you say California market is right now? Well, listen, I think San Francisco is a little bit soft. However, I think it's found a bottom. I was just there 2 weeks ago. My parents live there, so I might be a little bit biased, but you probably are not seeing prices this low ever again. But places like Irvine, which we were in, the property prices are up 10 to 20% every year for the past few years. So, California is still California. It's property prices are high, and I don't think it doesn't look like it's coming down anytime soon.
Okay.
Um,
Next question.
take that
I
one,
have
Robert.
a high value property in California with approximately 18 million US dollar value. I have no debt on the property. It's important for me to monetize the asset. What are my options? Coincidentally, we just did a very similar transaction to this with a client that lived in Southeast Asia, had several very expensive properties that he had paid cash for. He wanted to use the funds towards his business. There's two ways that you can go about doing this. If you want to go through the process, which takes 30 to 45 days, and do a standard, regular, conventional mortgage, we can absolutely do that. 30-year fix, 10-year interest only, whatever it may be. If you're looking to access liquidity quickly, which this particular client was looking to do, then we can do a bridge loan. So it's a short-term asset-backed loan. Really, no financial documents are required. It's based on the appraised value and will go up to, say, 70% of the value. And if you know California, that's actually quite aggressive on bridge loans. But we can normally transact these in a week. And once we do that, then you have the cash that you need, however you're going to monetize it. But then we take our time and we put it into a proper conventional loan without the stress of having to, do the process. So next question. Are there any recommendations on how to get the other 20 to 25%? I'm assuming you mean the down payment. So unfortunately, this is a requirement not only for our lending, but for all lenders. There needs to be some skin in the game for the borrower. I mean, I think that we are quite aggressive when it comes to loan to value, that we can loan up to 75% on a property to a foreign national with no credit history. So there's really no proof of it. There is a requirement for you to be able to come in with that money. It seems only fair. So for the 25 or 20% down payment, it needs to come from your funds. But if you own other property, you can cash out. You can, get the down payment, and then we can do a loan on the purchase as well.
I think I want to just add kind of to kind of follow up on what you talked about in terms of monetizing an existing property in California. So our parent company is an international real estate financing brokerage. And what we have been very busy with over the past few years is international bridging loans. And this is when it's also because property prices all over the world have, done really well, and allows individuals to pull equity out of their property in the UK, Australia, Canada, and the US, and some other markets as well. Pull cash out of the equity towards personal investments, college tuition, paying down expensive debt, renovations. Maybe my company needs working capital, whatever it is, when speed is a priority. And that is something that, we do quite a bit. And it's also because the banking market at the moment they're not really lending. And the reason why I say that is, what we have found is that if somebody wants to buy a home in France, the regulatory restrictions on lending is quite difficult. So what people have done is they've pulled out equity from their US property and bought in France, and vice versa. I need 25% down payment in the US because I want to get in the game. Oh, wait, I've got no debt on my Singapore property. I can refinance that out and use the money to buy US property. And sorry, on these bridging loans, it's Singapore, US, UK, Canada, and Australia. So those are the markets that we offer this this type of loan programs.
And to touch on that too, these are purely asset backed. So the need for financials, or if there happens to be stress in the financials, it's not going to be a factor on obtaining these loans. So it's a fantastic product. Okay, next question. Hello, everyone. My question is, when should I apply for a pre-approval prior to the expected date of a purchase? And for how long is the pre-approval? Excellent question. Again, you should get approved for a loan as soon as you talk to a loan officer, because as it would normally sort of come out, you find the perfect property when you're not ready. So if you get the pre-approval after you talk to the loan officer, and we can normally issue that within 24 hours from when you upload all your documents, you'll have that letter, and it's valid for 60 days as long as your financial situation or the loan program does not change. Do we have to be working in the US? Absolutely. As a matter of fact, 99.9% of our clients are not working in the US. They are working outside of the US, but obtaining a US mortgage. Next question. Does owning investment/rental property in the US require me to file taxes with the IRS? Rental income tax or capital gains or inheritance taxes? Asking for my non-US citizen and Middle East resident perspective. So certainly, anytime you're earning income in the US, whether it's rental income or personal income, you are required to file taxes. But as we had talked about before, and what's available in our concierge services, with proper tax planning and proper tax advice, you may not actually have to pay taxes on the income earned. And that's something very unique to the US, because the tax laws are actually written as a benefit for real estate investors, because it's such an integral part of the economy in the US. Often the tax laws, which apply equally between foreign nationals and US citizens, can be very advantageous to not being able to pay taxes. Now, I'm not a CPA, neither is Donald, so we've partnered with a group that can advise that. Next question. Does a loan cover other costs, legal, title, commissions, etc.? So the loan is either on, if it's a purchase, it's either on the purchase price or the appraised value, whichever is lower. But the extra cost, which is standard in any real estate purchase, regardless of the country, has to be paid out of pocket, just like the down payment. Next question. Sorry, Donald, I'm losing my voice. Do you mind reading the next question?
Yeah, no problem. This you mean so this is a good question. So from Hong Kong and they want to get into the US real estate investment game, good idea. And there's four phases of the real estate cycle. What phase are we in? Et cetera, et cetera. So I would say, everything changed in 2008, right? All cycles changed. The amplitude of cycles have been shortened. Um, and it changed in 2008 after the financial crisis, and it started to change in 2017 or 18, and it's continuing to change just because there's so much money and money printing and all kinds of stimulus that's been thrown into the economy, thrown into the world economy, that there's only one cycle. It's only going up. Now, I know that's kind of a childish to say that it will last forever, but at the end of the day, you look at supply and demand. There ain't enough homes in the US to fulfill supply. So the cycle, this way to look at a cycle, I'm not sure you can time it. Because if interest rates quadrupled in 2 years and property prices still went up 20%, what do you think they're going to do when interest rates go down? Right? So, I would say buy now because you'll never be able to time, the market because you're owning property to earn rental yield, cash flow, right? So rental yield is being squeezed up, in many of the states in the US. I'll answer the next few rapid fire, Robert, so you can save your voice. Will AM assist buyers with finding real estate across the states? Absolutely. We have a concierge service and a network of realtors that we can help you with finding your perfect investment property. Do you have advisors in Italy I can talk to? I'd love to have somebody in Italy, especially to go visit them, but we do have loan officers in Europe that you can speak to. Can an investor utilize the interest-only period at any time during the loan term? That's a good question. I think it's at the beginning.
Yeah. So how the interest-only loan works is the first 10 years is interest only. So it's a fixed rate and it's servicing the interest, which allows you to maximize the yield during that period. After the 10-year period, that loan converts into a principal and interest loan for another 20 years. So you have a total of a 30-year amortization period. The first 10 years, you're owning the interest. Now, what's unique is after that 10-year period, you expect that rate to adjust to whatever that market rate is at that time. And who knows what it'll be in 10 years. But the awesome thing about this program is it stays at that same rate. There's no adjustment in rate. The only difference is now you're just servicing the principal and interest and paying down the debt. So absolute perfect investor's loan.
Next question is, what's the interest rate forecast for 2025? Well, I need to dust off my crystal ball, but I think to answer that question, it's more important about the trajectory than where the target is. If you think about, interest rates, the way interest rates work and the way the markets generally work is that it discounts future expectations. So when, before the Fed cut rates previously 50 basis points, right? The market mortgage rates had discounted that. So mortgage rates have gone up because, quite frankly, the US economy is super strong. People are finding jobs, everything's great. So it's kind of slowed that down a bit. There'll be a jobs announcement on Friday. There's been a hurricane. Boeing laid off a bunch of people. So there'll be some softness and then rates will move up a little bit. But the trend is down, right? And if you were here at the beginning of the presentation, what the market expects is discounted in something called the Euro-dollar futures curve. And that is what market participants bet on where it's going. But it's not a bigger picture thesis on where it's heading super long term. And I actually think there are no release valves in the US except for lower rates, given the amount of debt that we have and is expected to add. And so I think that only means asset prices are going to go up, and also only means that, interest rates are going to go down. So, it's a way to answer your question by saying, I don't know what the exact target is, but the trajectory is favorable for overseas investors like yourself. My husband is a dentist in Australia and wants to move to the US. Amazing. Good idea. Any suggestions for us? Well, I think this is a little subjective question. I mean, there's, what are you going to be doing in the US? Your cost of living assumptions. Do you want to live near international airports? Maybe you can email us and we can have a maybe more intimate discussion on what your
I think it
objectives
may
are.
be referring to being able to obtain financing if they're going to move to the US. And it's actually very straightforward. If you're transferring with with a company or a job in the same, and you have a letter stating, then you can buy the property as a owner occupied or even a second home. If you want to buy a property prior to living there, you can buy it as an investment property and rent it out until that time when you do make that move.
Do we get to choose where we want to go in the US, or are there areas that are preset up for us? I'm not too clear on this question, but generally speaking, US is a free to travel type country. There are, some states where we prefer as an investment destination to others, but it's also depending on what you want. Generally speaking, when you buy real estate, there's really three reasons. One is they're trophy assets. You tend to leave them empty. They're kind of more expensive. You may use them for, vacation homes. They tend to be in places with skiing or by the beach or, like in New York or California or Aspen. The second one is tends to have some sort of, connection with education. Maybe I want my kids to go to school in the US. Maybe I want to buy a condo nearby and rent out in the interim. And the third is pure investment purposes. I'm not going to go live there ever. I just want to earn some cash, build some cash flow. And those are three very different scenarios. And we can help you with, those decisions. You just need to contact us and we can walk you through some of our rationale. All right. Does American Mortgages provide a one-stop shop approach to investing in real estate in the US, i.e., source the property, secure the finance, manage to settlement? Robert?
We do, yes. So again, referring to our concierge service, uh, if if you're looking for a property in a specific location, we've worked with thousands of realtors around the US that we know are quality vetted realtors. So if after you talk to a loan officer, you get pre-approved for a loan and you specifically are looking in certain locations, we can refer you to what we feel are the best realtors in that market. So absolutely. And we can assist you with the insurance of the property management, the financing, and even the end of year tax filing. So
What cities are the most promising in your team's opinion? Again, this is super subjective. I'd also strongly encourage you to make sure you get our deep dive report that will be published this week, which shows you the rental yields of the top 100 cities in the US based on population. I'll give you a quick hint. Detroit has gross rental yields of 30%. Now, are we going to buy a home to rent out in Detroit? Maybe, maybe not. But it really comes down to, there's certain things that are personal in nature. I want to go see the properties on the summer. It has to be near an international airport. I don't want to take more than 2 different planes to get to the property. It has to be near maybe my aunt or uncle or some relative that's there, or it's maybe near the school I went to when I was young, and so I know the area and I have some emotional connection to it. Those are the subjective elements to your decision. If it's just based on pure, investment rationale, then you want to look at what's driving those markets. It's usually population growth, it's usually wage growth, and we have all that information that we can help you with. But generally speaking, I still like Texas, I like Dallas. I like, you know, to a lesser extent, Florida. I really like Georgia. And I like some Midwest cities as well. All right. In my experience, short-term rental can triple the cash flow. Am I allowed to rent out the properties at Airbnb as a foreign citizen, or I must obtain a work permit? Okay. So,
I can answer that.
okay.
It's a very valid question. So for us, for our mortgage financing, if you're buying it as an investment property, it has to qualify on what the long-term rental income will be. But granted, I agree with you, especially in certain markets, Airbnb is fantastic. But when you're qualifying for the loan, if the loan qualifies as a long-term lease, then how you choose to rent that property is entirely up to you. Now, from my understanding, and you may want to check with a tax advisor, I don't know what states require you to have a business license for an Airbnb, but I think in general it is not a requirement. But again, I'm not an attorney or a CPA, so that's
Yeah.
something you want to look into.
And you can as a foreign national, rent out your properties as an air in using Airbnb. What are your down payment requests per purchase? I'll answer that quickly. For a foreign national, the down payment is 25%. And for a U.S. citizen living overseas, also known as an expat, that's 20%, up to 20%. How do we know we are getting the best market rate? Robert, you want to get that one?
Yeah, it's a very fair question. We don't mark up our rates. We pass on exactly what the cost of capital is to us, and that's why we charge a brokerage fee. So I can say because we are a direct lender and we are also a broker, you are almost and obviously understand this type of borrower, you are always going to get the best market rate available, based on our programs. Will an investor have the ability to monitor their investment online or via app, i.e. property view, check capital growth, basic info to keep them satisfied on their investment? Very, very good question. I think it would depend on the property manager that you're dealing with, how sophisticated they are with their tools. Certainly, I think there are apps that allows you to do that. I think, the property management company that we refer to is they, again, just like us, they focus on foreign nationals and expats. So they understand this market. I think anything more sophisticated or more, I guess, app-wise, I think it might be good to, see what's online and what's available. Next question. Can I do a cash out from a Turkish property? We do have a representative in Turkey that speaks Turkish, but we do not have loan programs in Turkey, not for American Mortgages or our parent company, Global Mortgage Group. Next question is actually thanks for the info.
All right.
Next question. Do you charge a broker fee to the client or do you collect your commission from the financial institution? Very good question. And it comes back to the question on are you getting the best market rates? So for us, if you see somebody advertising that are no points in a loan in the US, all that means is they're getting paid by the bank. Now, obviously, they're passing that on in a higher rate. So no matter what you do in the US when it comes to a mortgage, there is payment of some sort. We found that our clients prefer a lower rate, a more competitive program, and for that, we charge a one-time brokerage fee. Next question. Can commercial properties be purchased? Yes, absolutely. Now, of course, it depends on the the type of property, and foreign nationals may have some limitations when it comes to commercial properties. But if you do have questions or you have something in mind, please email us the property and we can tell you quite quickly if it's something that we can finance. Next question, what is the standard term on rental agreements for investment properties in the US? Very good question. I think in general, it's 12 to 24 months, depending on the state or even the property management company that you deal with. Next question, if I have a down payment of 25,000 or 25% for a foreign national, what is the upper limit of the property I should be looking at to invest? I.e., what amount of mortgage can I expect to go for? Also, what organized things like finding the sole representative, etc. That's a lot to unpack there. When we say our minimum loan amount is $100,000, probably the better way to state it is the minimum property value for us needs to be $100,000. So in your case, if you have $25,000 saved, you need to buy a minimum property value of $100,000, and we would fill in the rest with a $75,000 loan. Now, there are other costs involved, which, as we discussed in the previous question, there's brokerage fees, there's appraisal costs, there's title insurance, all of these things which are pretty static, and they're part of the transaction. When it comes again to finding the sole representative, again, referring to one of the questions that we have, we've worked with thousands of realtors all around the US. You tell us exactly which state or which city that you're looking in, and we will find you a realtor that we have already vetted and that will help you find the perfect property. Next questions, loans to commercial properties, i.e. multifamily. Yes, but again, so 1 to 4 units, absolutely easy. We look at it all the same. Once you get into 5 units and above, it is possible, but if you're a US expat, it's very straightforward. If you're a foreign national, there are limitations when it comes to anything over a 4-unit property. So if you stay 1 to 4, perfect. If you go above, then I think you should probably, if you have a property in mind, speak to one of the loan officers and see if it's something that we can finance. Last question.
Yeah, let me take this one. Last question for the day. And we really, Robert and I really appreciate everybody's interaction. The last question, save the best for last. When investors analyze a deal, we look at different metrics, cap rates, cash on cash return, IRR, GRM. In your opinion, which metrics outweigh other metrics? How do you define a good deal? For example, is it suggested, blah, 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 et cetera, et cetera, et cetera. So the short answer is everybody has their own kind of return hurdle rate, what they need to achieve. I will say the US is one of the, if not the only market in the world where you can implement something called the 1% rule, which means if rent is at least 1% of the property price, that's a good deal, right? So I would go and Google 1% rule. We have investors that live and die by this rule. But also, quite frankly, if you can earn positive rental income, X mortgage expenses, etc., of even if it's $1,000 a month, even if it's $500 a month, what's going to happen is let's just hypothetically say you net $500 worth of cash every month. 2 years' time, that property value will be at least 20% higher, and your mortgage rate might be 2% lower. Who knows? At that point, you refinance at the higher equity value and at a lower rate. So that 500 could be 1,000, right? So it's all about not necessarily identifying the dream situation now. It's to get in the game, right? So that's something, so 2 takeaways, 1% rule and positive cash flow.
Okay, there's a last question, and then we'll end it. But sorry, thanks a lot. But guys, I wanted to know something about the approval? Are there any stumbling blocks along the way? Again, because these properties qualify on the cash flow of the property and not your personal income, the issues like you would normally have when you're applying for your home mortgage in your home country, you're always going to have the underwriters asking for this, asking for this, or explain this. In this case, it's not normally an issue. If there are stumbling blocks, it may be, how long have you had your funds in your account for the down payment? For AML purposes, we just require 60 days to show that the funds that are being used in the transaction is in some bank account somewhere in the world. Or maybe there could be some stumbling blocks on the property. But in general, these are very straightforward mortgages. I think if for people that have done mortgages with us and the people that will do mortgages with us, I think the general expectation, or I guess the answer after they do the loan, it was a much more straightforward and easy process than they've ever experienced, especially when they were obtaining, a mortgage in their home country. So I think, Donald, thanks. That was,
That was fun.
I think you
That
were
was
supposed
fun.
to answer this question, though, at the very end, something about the rental yields. I don't remember exactly what you asked.
Oh, yeah. So the average rental yield in the US, actually as of last year, so it's probably higher now, is, drum roll, ding, 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 8%. If you take out California and New York, it's 10 to 12% gross yield, average rental yield. It's one of the highest in the world.
And I think too, if you have the proper tax planning, you can actually appreciate that entire rental yield, which is again very rare in any country in the world. So
awesome.
yeah. Awesome.
Grateful for
Well, thank
everybody
you.
to
Yeah, thanks, guys.
all right. Thanks, Robert. Have a good
All right,
evening,
thank you,
everybody.
Donald. Thank you, everybody. Appreciate it.